This is our Forex blog for November 4th, 2013, and in my opinion this is the easiest way to trade using our tools. These are our currency indexes, which show you each individual currency as if it was a chart. And you can see the dollar over here on the left starts the day off underneath the hourly moving average, so it's more likely to go down, and guess what? It does. Comes up to the hourly moving average here and can't get back above it. It's a resistance area and it's likely to come down, and it does. Same thing again here, and it does. You can see trend line breaks, extremely high probability ways of trading by just visualizing what each currency's trend is. These work on any intraday time frame, 1 minute charts, 2 minutes, 3, 5, 15, 30, 20, 22, whatever, hourly, 4 hour, and even daily, weekly charts as well. So you can see the trend on any time frame. Fibonacci trades work, Fibonacci profit targets work, and you can see that the euro here, daily, weekly, monthly trends down. You can use some of our statistical tools, such as the perfect oscillator. When it hits the plus 80 level and a longer term trend is down, it's very likely to reverse. You can see a double top right here at the previous day's low in the euro. It's got a slightly lower high here on the oscillator, and that's called a divergence trade. It's very likely to predict a downtrend. Notice here and here. Also two great places to sell because the longer time frame trend is down. So what do? You just simply find a currency that's strong when a currency that is weak is likely to reverse and go down or continue to go down. So that would be around 3 o'clock, 10, and 11. Earlier today, the pound, you can see, became strong. However, the longer term trend is down. Let's take a look at some of the other ones. You can see the Australian, very strong. The New Zealand, also very strong. So at 3 o'clock, let's take a look at the Euro Australian. The Euro is very likely to fall around 3, and the Australian is strong altogether. It's likely to have some kind of a drop at 3. All right, you can see on this chart here that the Australian at 3 o'clock is kind of trending up, and it reverses at the same time. The trend of the euro is down and the Australian is up. So basically you're looking for sells in this, on any kind of a decent sized move. If you're focusing on selling this, this is probably not the best example, because the best trades are ones where they both line up at the same time. For instance, the New Zealand, very strong. You have a nice decent pullback, and to draw a trend line off of this. This is a very high probability place to be buying the New Zealand around 5:30. So let's find one that's weak at 5:30. The CAD's weak, although the daily, weekly, and monthly trend is up. At 5:30, the Swiss is breaking down underneath the previous day's low. It's not able to get back above it. That's a great trade right there. New Zealand, Swiss, very likely at 5:30 to go up. And when you time two currencies correctly like this, you're going to see that most of the time you're going to find 20 to 30 pip moves. 5:30, this one's likely to go up. You can see it's kind of a little sideways wedge pattern. It breaks out, you put your stop underneath here, and it went from around 75, 60 up to 85. Not the biggest move in the world, but it did go up 25 pips. And frequently, when you find one currency that explodes up and the other one explodes down, you're going to find 20 to 100 pip moves. What's nice about this is you can really spot when, for instance, a currency that's trending up. You can draw trend channels. When they break those trend channels after trending for 5 to 10 hours, typically you're going to get a big reversal move. Ideally, you see this kind of pattern when the longer term trend is down, and you will find huge moves. Let's take a look at the Swiss, which was trending down, and most of the time the containment bands contain price, as you'll see. That's also an excellent place to be looking for reversal trades. Today was a pretty low volatility, choppy day. You can see most of the currencies didn't even hit their containment bands, but majority of the time, if we scroll back into the past, you'll see that the containment bands tend to contain price. That's why we call them that. And you'll get a bounce off of them, and sometimes they go a little bit below them before they bounce. Most people just want to sit down and not have to think about it, not have to learn anything, just trade. So a lot of people are really loving our new FX trade signals. You can see this one give a short right here, you put your stop above the high. It only led to about a 10 or 15 pip win. Let's scroll back. I think there was a small win on Sunday. Anytime you have a loss that's 5 to 7 pips and a win of even just slightly bigger than your loss, you're gonna have net profits. There's a small loss right here. This trade right here, it kind of went sideways a little bit, went one bar down. You move your stop from above the highs down to near even. You only lose 5 pips here, probably lose 3 pips here, and this is not a super huge trend day. You have a nice little win here. This one here, potential of 5 to 10 pips. This one worked. This one worked. This one here, obviously you would have a loser and then a win. And on a dead day like this, that's pretty exceptional because there really wasn't, we went from a downtrend where we're trying to sell it, and then it switched to an uptrend. This was probably at a resistance area. There's about 150 different signals that we look for. Some of them will support resistance, Fibonacci based, trend line based, and so forth. But on a day where it kind of just reversed from a downtrend to an uptrend and really didn't have any big moves, there was more net wins than losses. This is one of the lower volatility days without much trending. Typically after a day of low volatility sideways moves where nothing happens, you can see the yen in a super tight range bouncing around all day long. When you get a breakout out of there, it's very likely to trend. And all you got to do is find a currency that's weak at that time. So you can see this, the euro was going sideways, the longer term trend is down, it broke down the same time the yen broke up. The euro yen is a great one to be selling right now. And as you can see on the chart, this is exactly what happened. So you got the exact same low volatility pattern right there. You go short right when it breaks down, put your stop above the high. You're risking about 15 pips in this case, and you can see it very quickly fell 35 pips. And the real key to trading, even on choppy days where you have a bunch of small wins, small losses, is if your wins are 1.5 to 2 times bigger than your losses when you're intraday trading, and you're 50 to 80% winning, that's all you need to make money. I mean, you actually only need to be right 40% of the time if your wins are 2 times bigger than your losses. Let's look at one more example. We know that the yen was exploding up. The only downside of the yen is that the longer time frame trends is kind of down. Ideally, you have a sideways range like this and it breaks down and goes into the direction of the longer term trend. The Swiss's weekly and monthly trend are both down. It had a big move up. It's kind of hovering right at the hourly moving average. It was not able to bounce off of it. So the Swiss yen would have been another excellent one to be selling. And same exact thing. It breaks down. I think it was somewhere around here when that trade happened. You put your stop right above these swings. In this case, you're not even risking 10 pips. And the win was many times that multiple. It pretty much fell immediately. This is probably 4 times bigger win than what your risk is. And that's the reason, in a nutshell, why any tool that helps you pinpoint accuracy trades that are likely to trend like this are, in the end, if you take enough trades, going to find enough big wins to make up for the losses, and you have a bunch of small and medium-sized wins as well.